Hi, this is Sunday the 9th of February and this is the market outlook for SPX for the second week of February. Let me just update those Fib patterns since the market has gone up in what it seems to be or seems to have been a failed breakout above the previous all-time highs around 33.30 to reach well almost like 33.50. The strong resistance is actually on 33.60. That said, sometimes it just doesn't get there. There's what we call a stall level here. If you have followed my advice to learn about the Merrimath lines, you will see that there is that line here, which is a stall level, at least in this time frame. And with that look back period, just to give you some idea, I am using a 64 range multiplier here to make it a bit more responsive. With Merrimath lines, you use either 128 or 64 generally. 64 here to make it a bit more responsive because the market has been like going all over the show over the last 2 weeks. Generally, I would put it back to 2, where, as you can see, sometimes where it gives you a longer term picture, and that longer term picture, this part is still glitch on the 4th. It looks like the market is still very bullish. Let's go back to 1. Okay, so the market failed to reach this new target about 33.60, and on Friday it actually dipped below the previous all-time highs around 33.35. So is that an anomaly, or is the market now going to retrace further? I would say that the market has still has some fairly high volatility. Everyday move can be around, I mean, one SD is about 30 points. So this market can still move quite rapidly in either direction, but I would only be concerned if the market retraces to this pivot level, which is the 50% fib as well. So for now, we will just watch the 33 16, 17, let's say 33.20 as the resilience level where the market can still go back up to that target, or whether it retraces to a more salient fib. And those salient fibs are about 3300, 3280, let's say, and about 3265. And there's no reason to believe the market would dip lower, and in fact one of those two are most likely to be the test levels. So this is the 4-hour time frame that gives us generally a fairly good picture for the next 2 to 3 days, so maybe up to midweek. So my outlook here is, if 33.20 is broken, going to 3300 and maybe 3280. So, and if the resilience holds, then it will go back up to maybe go for that 3360. Now, if we look at 1 hour time frame, here we see the clear signal and the same target around 3360. The sell signal was actually confirmed or repeated here, and we have obviously the same type of picture. As far as the signals there, it's still bullish, it's still long, and it may be peaking, which would indicate that from this perspective the market is likely to remain quite bullish for a while. So that would mean the retracement to even the first fib level is still unlikely at this point, unless of course if this one turns around, then we may have a good sell signal, but it's not going to be happening probably over the next few days. Now let's have a look at the daily chart for a longer term picture. Here we see the market has gone back to bullish again. It's not exactly the best signal because it's bouncing back on a fairly weak, I mean, generally the better signals are when the indicator is almost like overbought or oversold. So this one was actually a pretty good one. This one is fairly weak. In terms of longer term outlook, it is of course quite bullish, but we here have the stall level, which is the same as the target or resistance levels on a lower time frame. So considering this is a weak signal, a fairly weak signal, this stall level may actually be a good resistance overall, but that we will see probably over the next, maybe over the next week. We may also see a return to the previous channel being rejected or broken. See this little glitch be erased to actually return into the same bullish mode that we had before. If I now finally look back at the 4-hour chart and try and plot Fib expansion pattern, we here see a possible target about 33.87. So we'll see whether the market hovers and stops at 33.60 or maybe tries and reach out to 33.90. I would say over the next few days we may have some retracement, and again we will see whether we get to 33.17 or even 3300 before it goes back up. Okay, before I close this, a look at the VIX. The VIX is in a very mild contango. It's still pretty flattish, but there's no abnormal concern about a strong reversal anytime soon, except maybe for that little anomaly in October, but that may be due to election jitters early November. Right, that's it for now. Next video tomorrow, 8 o'clock or just after 8 o'clock in the UK with our positions. Enjoy your weekend and see you tomorrow on Slack. Bye for now.